This is our Forex blog for August 12th, 2011, and we're proud to release our new FX Trend Pro. This is a combination of 4 of our fastest and what we consider best statistical trend analysis tools. One of them measures the statistical momentum, the intensity, bar by bar, and it compares today's real-time reading to the past 20-day average. In other words, how far does the euro-dollar move each bar? Is it 5 pips for this time of the day? And if it moves 10 pips this day, then that's twice the intensity of what it normally has. So that's one of the 4 tools. And the other 3 measure the direction, the percentage of currencies trending up or down, with 3 other very fast tools. And by averaging them together, we improve, and reduce the number of false signals. Rarely does the market go up or down consistently all day long. It goes up for an hour to 3 hours, then down for 20 minutes to an hour, then back up, and it either goes higher or it stalls and then it begins a new downtrend, or it just chops around, goes up for half an hour, down for half an hour. That's just the way it is. These tools measure 4 different statistical, both trend direction and intensity of that direction, and combine it into one tool. Underneath this real-time tool, we have our daily, weekly, and monthly trend. So in a perfect world, you want to buy a currency that has real-time strength, like the yen today at 6. And when it has a daily, weekly, and monthly trend that's up, that's perfect. You want to buy that currency against one of the weakest ones. So at 6, one of the weakest currencies you can see here was the CAD. The daily, weekly, and monthly trend was down, and for the most part it stayed weak until about 8 for 2 hours. Now the yen was only really strong for about an hour, then it had a little bit of weakness, strength for only 5 minutes, and then not much going on. But from 6 to 7, you had a really high odds trade of selling the CAD yen. So let's bring this up here. Now notice this chart at 6 o'clock. It actually flipped with one of our new tools, the Fisher transform, at 5:45, shifted down. You can see it went right up to the hourly moving average, which is a major resistance area, and then it also started to show some weakness with this individual tool even before 6. So at that point you're looking to sell it, and normally the hourly acts as a support resistance. Coming to it from above, it acts as support, as you can see here, and coming to it from below, it acts as resistance, as you can see pretty much the rest of the day. So you're basically looking to sell this when it breaks down here, and you can see this particular move only pulled back about 25 pips, but it gave you many minutes to prepare for that trade, and it became again weak, extremely weak, at 12:30 right here, and you can see that lasted for an hour. But before that, let's look at it at 11. What's the strongest currency to trade this with at 11? It's not the yen. The yen's not strong, and the dollar isn't either. At 11 o'clock, the euro is relatively strong. So at 11 o'clock, when you saw some strength, if you want to trade the CAD, the best, one of the best ones to trade it with is either the euro or even the Swiss, which is even stronger. The pound was strong, but it was kind of losing a little bit of its strength right before 11 there. So let's take a look at the CAD Swiss. Weak CAD, strong Swiss at 11. You can see coming up to here. Now the only difference between these two is this particular currency is above the hourly. One of our rules is above the hourly. You primarily want to buy it, but you can see it started to show a little bit of weakness right here. The strength kind of subsided a little bit even before the currency. Sometimes the currency that you look at is faster than the currency meter, which only shows each individual currencies. In other words, if one currency is leading, you can get some sell signals before even the currency meter gets it. But after 11 o'clock right here, you can see it pulled back. There's hourly support here. If you shorted, you really don't want to short a currency right in front of a support area. So for that reason, you wouldn't take that trade. But let's look at it at 12. At 12, the dollar was the strongest. 12 o'clock is usually relatively dead time. I'm going to try to find better examples, but a strong dollar, weak CAD. You can usually look for buys in this. Here's 12 o'clock. This one again is above the hourly moving average, comes back and finds support there. Much better trade because you're actually trading with the trend in this instance versus against the trend in the other one. And when it goes above those bars high, you buy. And you can see the dollar CAD typically moves about 75-80 pips a day. So if you can catch 1/4 of the day's range, that's good. 1/4 of that would be 20 pips. In this case, it really goes up, very close to 20 pips. But even if you got out right here, you made maybe 11 or 12 pips. You can see as it's going up here, the statistical strength was really only ridiculously strong for a few minutes, and then it kind of subsided here. So not the best trade in the world, but you can see by trading with the trend, if it's above the hourly, you buy; below the hourly, focus on sells. You had an opportunity there that worked very well. The Swiss was quite strong around 5:30, and it stayed strong for about an hour and a half. Which currency was the weakest at 5:30? Well, the dollar was very weak, but it went strong right around 5:30. You kind of want to find a currency that's either weak at that time or doesn't really have that much strength. The CAD is kind of one of those currencies. It has very little strength, and the longer term trend is down at 5:30. So you might have been looking for a CAD Swiss sell at 5:30 and afterwards. Alright, this is another example where if the currency is above the hourly, you're actually going against the trend. So at 5:30 here, contemplating looking for a sell, you're kind of going against the trend, and you're likely to make less money. But you can see this went up with a lot of strength, pulled down with pretty intense weakness, and as it came back up here, it didn't have quite as much strength as it had before. If you had looked for sells right here, or even when it broke down right here, you really didn't make that much money because you're really going against the trend. But should you have sold this low right here at 7,800, you can see it pulled back to 77.70. It did fall 30 pips after our currency meter gave you that reading. This is a more volatile currency, so it may not look like too many pips on a chart, but it's quite a lot in reality. Now, going back earlier, the Swiss was incredibly weak at around 3.15. The yen was extremely strong during that time, so you might have actually considered selling the Swiss yen at 3.30. I'm just trying to show you how this new tool works and how fast it is. Now notice this currency initially is above the hourly here. We have a sell signal actually right here on the Fisher, right at the very beginning of the trend. As you can see, this red bar. This one also switches red here, but it doesn't really have a lot of intensity, and still about right here. And it's coming down to the hourly. You never know if it's going to break the hourly, find support there, and try to go up. So, and because the low is right here at the same point, you really want to wait for it to break that level. In this case, this is the best example so far today. You can see it fell from 184 pretty much straight down. Usually containment bands find some support and you get a little bounce, but this would have been a really good place to get out of the trade, somewhere down here near 99.10. That is absolutely huge, almost 200 pip move. Now, because the Swiss was so weak, and it was also weak yesterday too, so it's safe to assume some of that continuation will happen. Another one that was very strong at 3.30. At 4 here, the pound became really strong. That would have been a good one to look at. 3.30, the euro was extremely strong. So even a better one than the Swiss yen would be to buy the strong euro versus the weak Swiss at 3.30 or so. And you can see that our signal for the buy happened right here. Notice how early into the trend it switches from down to up, but it doesn't have a whole lot of intensity. The tool that combines 4 different indicators really doesn't show incredible strength until right here, 3.30 exactly. So if you wait for the price to go 1 pip above this bar, we have the 15-minute average here, which also tends to act as support and resistance. You can see support here, resistance here. When it breaks out of here, this is another amazing trade that goes up close to 200 pips. And using our range bar, if you missed that first trade, you could have found an opportunity to get in the trade here for 30 to 80 pips. Again here for another 100 pips. There are plenty of opportunities. And notice again how the white containment bands contain price. Another one that became strong at 4 was the pound, incredibly strong. Because this uses 4 different tools, pretty much all of them have to be giving a buy or sell signal to get a plus 80 reading. Pound Swiss at 4 o'clock. Notice 4 o'clock right here. This actually went green down here. The pound wasn't the strongest one earlier. Maybe the euro was stronger, and as time progressed, you were in that euro trade, and later on the pound became strong. Well, I always hate to chase a currency, but this happens to be one of the strongest ones, and typically once this hits 80, you can have some continuation of the downside, even if it's only for 1 bar. But you got a little bit of a pullback here. You buy that pullback. Very good place to get into that trade. And let's draw your fibs on that first wave up. You can see the fib target's a great place to get out. You're still risking 10 to 15 pips in this currency. You're entering at 50, and it's got a very good chance of going up 130 pips. This is a huge win versus a tiny amount of risk that you're taking. Some currencies lead and other ones are a little bit late. The euro, it probably went up against the pound from 3.30 to 4, and then the pound became the strongest of all of them. That's just the way it is. I mean, but you wouldn't have complained getting 200 pips in the euro Swiss, and then once you're in that trade, you spot the pound being strong, you have another opportunity to catch that last second wave in this one. Now, the Swiss was really weak, and then it had some strength, and it had less weakness in the strength here. So when it starts to show some real strength here at 6, what's one of the weakest ones traded against at 6? The pound, not the best pattern I've seen. The CAD is weak on all time frames. I'd say the CAD. You want to sell the weak CAD versus a strong Swiss at 6 o'clock. And I think we already did this as an example. You can see coming up to 6, this one had shot up because of the weak Swiss as well, and there was a 30 pip move right there. Let's try to find a trade in the New Zealand. The longer term trend is down. This one's also weak at 6. Let's trade the weak New Zealand against the strong Swiss at 6 o'clock. We're going to look to sell the weak New Zealand versus the strong Swiss at 6 o'clock. So here's 6 o'clock. We're coming up to 6 right here, and you can see that the individual currency meter might show strength at 6, but the individual pair, because it has all the New Zealand pairs in it, all the Swiss pairs in it, you can have 2 pairs that are both weak, and one pair is slightly weaker than the other, and therefore that currency will go up. So this one actually flipped to negative right here at 545, and you can see a little bit of a sideways action here, even at 6 o'clock. If that's when you first saw it, you look to sell it there with your stop right above the high. Tiny amount of risk. You're short at 63.85, and this kind of goes down and then starts to go up. Even if you got out of this trade somewhere halfway on this green bar right here, let's just round up to 63.60. You have a 24 pip move right there in this pair.